Okay, good afternoon and welcome back to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to be doing a live market analysis where we're not going to talk about strategies or teach. We're really going to take some of the things we've learned over the last few weeks and look at the markets together and see if we can show you how we apply selling option strategies, selling cover call, selling cash secured puts, as well as perhaps trading some debit spreads or buying some calls and puts in this particular market. So we're going to go over all of those things here today, a lot to cover. But again, today is really a day for you guys to submit symbols that you want to take a look at so that we can look at them together, as well as a day for you guys to ask as many questions as you would like regarding the strategies that we've covered over parts 1, 2, and 3. And we're going to do a quick review so that you, for those of you that missed it, you can get a quick understanding as to what we covered here. Apple reports earnings today, Amazon reports earnings today. So we have a lot to look at together here. So let's go ahead and get started. Let's see. So before I do, just a quick disclaimer, what we're going to discuss here today is purely for educational purposes. It is not a solicitation or recommendation to buy or sell any specific securities. Now, for those of you that are brand new to OptionsPlay, you can sign up for a 30-day trial to the platform that we'll be using here today by using the link here on your screen. I'll post that into the chat window. For those of you that are first-time users of OptionsPlay, welcome. Today, what we're going to be able to do is show you a different way, a different user experience for trading options that hopefully makes your options trading a little easier. Now, today, what we're going to do is we're going to go over a few different things. Predominantly, what we're going to do is we're just going to do live market analysis. You guys are going to call out some symbols, some views on those particular symbols, and we're going to look at them together. We'll also have a Q&A here at the end. But just to let you know, we have a lot of, in my opinion, some great things coming up in May. We have prepare your portfolio for a market correction. I think this is going to be very timely given where the current markets are sitting as far as how to prepare your portfolio for another market correction. If you do feel that we might be due for another correction, how you can utilize options to potentially protect your portfolio. Then we'll talk a little bit about optimal expiration date and strike prices. A lot of questions around from traders asking, how do I pick the right expiration and strike price? So we want to talk a little bit about the overarching formula, if you will, for selecting the right expiration date and strike price. So regardless of what strategy you're trading, you have a good sense for how to go about selecting the right expiration and strike price. Then we'll get into credit spreads. So I've been talking a lot about credit spreads, especially for those of you that have been joining me on Tuesdays and Friday mornings. So we're going to do a deep dive into credit spreads, making sure for those of you that are newer to the strategy, a better understanding of when to use it, what are the benefits, what are the downsides to credit spreads, and what to look for optimal credit spreads to maximize your income. And then at the end of May, we're going to do the same thing again. So every single month, what we're going to do is we're going to teach different topics, and then at the end of the month, we're going to review those topics and do a live market session together like we are doing here today. So let's go ahead and get started. Now, before I do, I just want to remind everyone, a lot of questions over the last few weeks regarding how to access the liquidity and earnings calendar that we've been posting. Now, this has been added to your platform, so there's no links. You don't have to access any links. You will have the liquidity and the earnings link at the bottom of your platform. You click on either one of those, it will launch the liquidity tool as well as the earnings calendar. Really important that you use those these sheets, because options liquidity is extremely important, because I can't express how frequently I have an idea that someone provides to me, whether someone on my team throws an idea at me, whether it's a chart that I'm looking at where I get an idea, and then I bring up the options play and I try to find an option strategy on that directional view. Next thing I know, the options aren't very liquid, or I just can't find the right option strategy for it. The options liquidity tracker is designed to prevent that, so that you have a list of just very liquid optionable symbols. So if you conduct your research predominantly in this particular list, you know that when you seek the actual options on these symbols, you know that those options will be liquid. So you won't have to worry about liquidity after you do your research and then find out an option's not liquid. So right now, there's about 188 names on this particular list. So not a big list, right? Because there are 4,200 names that you can trade options on. There are only 180 of them that are liquid. So you can substantially reduce the amount of research that you have to do on the names outside of this. Because if you're going to trade options on them, then you shouldn't really be doing a lot of research on stocks outside of these 180 names, or else you're trading options that just aren't very liquid. The other thing is the earnings calendar. We've built this new earnings calendar based on liquidity. Again, even though on a given day there might be hundreds of symbols that are reporting, most of them are not liquid. The vast majority of them are not. So the ones in green are the most liquid, the ones in yellow are somewhat liquid, and then the ones that are not highlighted at all are the ones that are not liquid at all. So you generally want to avoid trading them, especially going into an earnings event. And again, both of these are available to you on your OptionsPlay platform by clicking on the liquidity and the earnings link at the bottom of your screen. So no more links, it's just right there on your platform. So this particular month in April, we went over quite a few things. So we first actually started the month talking about selling options. We talked about short puts and cover calls. Those are the two strategies that we really covered during how to enhance your equity positions utilizing options. And so a short put is really not a strategy that I think we're going to talk much about today, because a short put is for equities that you want to purchase. I don't know many people that are looking to buy equities at these particular levels, especially at these valuations. So you're more likely going to perhaps sell your equities, and you might do it utilizing a covered call. So we're predominantly going to be talking a bit about covered calls, and then we're going to talk a little bit about debit spreads as well. So if you see some opportunities going forward, perhaps you think a stock is going to significantly move to the upside or significantly move to the downside, we're going to talk about using debit spreads, put and call debit spreads, to take those directional views. More importantly, leverage your capital to take those directional views, but do so in a way with limited risk. George, to get a copy of that spreadsheet, again, it's on your OptionsPlay platform at the bottom of your screen where it says liquidity and earnings to get access to those spreadsheets, okay? So no more links, you can just access it directly from your OptionsPlay platform. So let's go back. So those are the things that we covered in the first half of our April education. Last week we covered the golden rule of risk management, where we talked a lot about the psychology of trading, how to become a successful trader by thinking about how to minimize your losses and how to stay in the game rather than thinking about how to win, because there's no such thing as winning in options trading. There's no such thing as winning in trading in general. There's only blowing up your accounts and not actually having enough capital to continue playing. So at all costs, your role is to prevent yourself from blowing up. And you want to do that by managing risk. Okay, so those are the things that we covered this in April. We're going to try to touch up on each one of those as we look at the overall markets here. So let's jump over here to the markets. So, Apple hasn't reported yet. Doesn't look like it from my perspective. So I'll just start by talking a little bit about the markets now. So we've had this significant sell-off here. This is something we'll cover tomorrow morning as well for those of you that join us on Friday mornings. And we've had a pretty significant rally back up to the upside. We basically just touched the 61.8% retracement for those of you that like to look at Fibonacci retracements. As you can see, we basically just got rejected here yesterday at the 618 Fibonacci resistance. Now, that in my opinion doesn't mean a whole lot. If you look at the markets, despite the fact that we are severely overbought by most measurements, the market continues to grind higher. This really comes down to the Fed continuing to pump liquidity into the markets. It really reminds me very much of the price action we saw after the breakout from November. We had a pretty long, consistent run to the upside that did not see any major corrections whatsoever, and it went on for quite some time, quite longer than we would have expected, and then it resulted in a massive sell-off. Obviously, that massive sell-off, no one could have possibly predicted the coronavirus, but we're starting to get into that type of feel again where markets just continue to kind of march higher no matter how bad the news comes out. I don't know if anyone here, I'm sure most of you read the headlines. I don't know how many of you follow economic indicators and things like that, or if you look at the earnings track. So, if you look at the S&P 500 right now, we're on track to earnings per share is going to be on track to be down about 16% year over year. The equity markets do not seem to be phased by that. We are now trading at peak valuations because we had a decline in earnings. So we are now trading at a higher multiple than what we were trading back here in February. So valuations are actually even more expensive now than what they were in February. Now, none of that really matters at the end of the day because the market continues to move higher. And the question is really how much higher can the market move before we start to see a bit of a correction? And what is the catalyst that kicks off that correction? And what we want to do is we want to know, how do we position ourselves between now and potentially that correction that's going to come? Whether it's going to be a week away, a month away, we don't know. So today we want to talk about is how do we position ourselves for that? Because there clearly are signs of exhaustion. There clearly are signs that as this market continues to move higher, that momentum is not confirming these new highs as much. Money flow certainly is very weak here. As you can see here, the money flow here has actually continued to stay negative despite the markets having its strongest month we've ever had since 1987. I think I just saw that headline right before we started today. It's a interesting market to trade at, to say the least. So let's take a look at some names together. So let's see. So today what I'm going to do is, if you want to look at some names together, please post those names into the chat window. If you have questions, please put them into the Q&A window. We'll try to cover those in that particular order. So symbols in the chat window, questions in the Q&A window. Ernest wants to take a look at NVIDIA. So NVIDIA, just like most of the semiconductor stocks, one of the things I will say is that, this is pretty much the same for AMD as it is for NVIDIA. This is the weekly chart on the left-hand side. What concerns me is really this divergence we're seeing in momentum as markets continue to move higher. Momentum continues to just move sideways. It's not confirming these highs. Now, here's the thing. Markets can continue to show divergence longer than you can stay solvent. So you might short a stock because you think that there's negative divergence, it's going to move lower. But guess what? Markets can continue to move higher for quite some time, as we saw from that November to February peak, where things look like they were overbought. Things look like they were trading at peak valuations. The corporate profits were not growing during that time, and everyone was expecting a bit of a pullback, and we just didn't get it. So same thing here. We might get an extended move to the upside despite the fact that momentum is showing exhaustion. There's divergence here. That's my thought here. I think you'd be very careful to trade these names. If I had NVIDIA, I would be looking at selling cover calls on this particular stock. I think cover calls right now makes a lot of sense because look at NVIDIA trading at 292. I can sell the, let's change my settings here. Let's do short-term optimal for my calls, short-term aggressive for my puts. So the short-term optimal call is the May 330 call. So $37 out of the money, still collects 1.2% of the underlying stock price in the next 22 days. So you can reduce your cost basis by another 1.2%. You can even get more aggressive, maybe sell a 317.5, and you're going to collect 2%, 2.14% of the underlying stock price. That's how I would be positioning myself if I owned NVIDIA right now in this particular name. I think it's hard to continue to sell puts or put spreads because I think you have a pretty high risk of the stock pulling back here. This is the same for most semiconductor stocks. So if you want to get long exposure, I would get long exposure through calls and call diagonals like we currently have with Intel. We are short some of the weaker names like Texas Instruments. We actually think that there are some semiconductor stocks that aren't going to do so well. So as you can see here in Texas Instruments, it had a pretty strong support or resistance level here. And this is part of why we took a bearish view into, or I would say more of a neutral view into Texas Instruments, because this 116 level is a major level, and we think that it's going to likely provide some resistance and perhaps sell off and fade away into this particular level. So it's hard to trade this market. There's no doubt that it's hard to trade this market because fundamentals aren't lining up right now. And do you continue to push these longs despite the fact that we're at peak valuations? It's hard not to as the markets continue to move higher, but you're always concerned about that pullback risk here. TTD, the trade desk. Trade desk, I don't know a lot about this stock, but it certainly was one of those stocks that I think, recently have been doing very well. It's back near its January and February peaks. I really just don't have a lot to add here on this particular name. I don't know a lot about the particular stock, but it is very strong and managed to break back above that 290 resistance level. If it can continue to move higher, I certainly think this is bullish. It's certainly just showing a lot of relative strength. But again, I unfortunately just don't know a lot about this particular name. What do you think about Netflix? Netflix, I actually talked about this the other day. What's interesting here for me is that if you look at Netflix, if you zoom in a little, actually, let's look at the hourly chart, I think. Whoops. That was the weekly chart. Netflix, for me, what I noticed here, this was on I think this was the Tuesday morning Outlook session where I was on with Michael Coe. I said, we have this triangle here. We broke down to the downside of this triangle. It's back up to retest this 420 level as resistance. My inkling is that this is going to pull back. That's my thought process here. I could be wrong. I could be proven wrong here. I've been proven wrong before. I've been proven wrong on Nike. I've been proven wrong on a few consumer discretionary stocks. What really bothers me about Netflix is the valuations, the high debt levels, and the fact that as we kind of get back to normal, as we have the ability to go outside, I think that's going to put some downside pressure on a stock like this. So that's my view here. Disney, the chart the other day actually looked the opposite of Netflix, right? So if you look at the Disney chart, it kind of looks the exact opposite of Netflix, where you had this resistance level, the triangle is drawn this way. You broke out a little bit to the upside. It's coming to test this as support. Is this going to start to rally? Possibly. I mean, Disney is a very different business than Netflix, even though we talk about streaming wars between Disney Plus and Netflix. Disney, obviously has the amusement parks. They have ESPN. They have a much more diverse business model than Netflix. Netflix is at this point a one-trick pony. So if we look at Disney, I do think that the fact that it pulled back to this 108, 110 level, if you want to go long, call options are pretty expensive here. If we go out to, let's say, June or maybe even July, if you bought the 110, 130 call vertical here, you're spending $544, which is roughly about 5% of the underlying stock price. If you think that Disney is going to rally, I don't think paying 5% is a huge ask here, because no matter what happens, even if the stock does reverse lower, you're risking 5%. I think that might be worth taking on that kind of risk if you think Disney is going to rally here. AVLR, I know nothing about AVLR. I don't even know what this stock is. Olivara, strong relative strength. 1 month and 6 month trend is bullish. Certainly, very similar to the trade desk, chart here. We've managed to break back above this $89 resistance level. I would keep a close eye out on this. Looks like call options here are pretty expensive. Maybe you could sell a put spread and collect a little bit of premium here. You can sell an 85.80 put spread, collect $1.60. That's not bad for a call spread. That's basically $5 out of the money. Again, I know nothing about this stock, so I don't have a lot to comment. SPY, I think we already started on SPY. Someone wanted to take a look at Facebook. Let's take a look at Facebook. Facebook, I think, is one of those stocks where if you own this stock, you should think about selling cover calls. Selling this May 222.5 call will collect you very little money. 222. Oh, it's trading at a very wide bid ask. Does Facebook report earnings today? No, did it already report earnings? When is Facebook reporting earnings? Yeah, it just reported earnings yesterday. So it's trading at a really wide bid-ask spread. So you see 14 cents by 227. But if you got fill at the midpoint, you're collecting 1.1% of the underlying stock price in 22 days. Those are the types of cover calls that you want to sell. You might even get a little bit more aggressive and sell maybe the 212s and collect 1.32% of the yield. Or I'm sorry, 1.5% of the underlying stock price. Again, these are the levels that you want to start taking profits at. You're trading these stocks at peak valuations. Hard to imagine continuing to buy these types of stocks. Could you cover in one of your webinars how to unwind a credit spread or a put spread? Well, unwinding a spread is really just closing out both legs at the same time. I'm not sure that there's a lot to cover on that. Sal, yes, it is only available to paying members. The options, liquidity, and earnings calendar is available through your platform by clicking on the liquidity and earnings link at the bottom of your platform. So you just have to have access to the platform, whether you're on a free trial or if you have a paying subscription. NLOK, so Norton LifeLock. I don't know a lot about the stock, but I do know that the cybersecurity stocks have been doing very well. OKTA is another one. What's interesting here is that as long as it stays above 21, I certainly think that I'm bullish on this particular stock. I don't know how much longer these stocks can stay higher. NLOK. Notice here, what is concerning to me is that as the markets continue to move higher on this weekly chart, momentum is continuing to move lower, money flow also moving lower. This is the, whoops, let's look at a daily chart here. Daily charts, same thing. As you can see, as markets continue to move higher, momentum is continuing to move lower. That tells me that there's exhaustion here, that you have a high probability of a pullback. The only thing, just keep in mind, the only thing about negative divergence is that it doesn't tell you how much that stock is going to pull back by, which is why I'm more inclined on a stock like this to sell a credit spread here, something like, I don't know that I'm able to find a credit spread, but if I sold something like a $22, $23 credit spread, so if I did a $22, $24 credit spread, I'm collecting 70 cents on a $2 wide credit spread. That's roughly about a third. It's a little higher than a third. It's a little bit out of the money. I'm more inclined to fade this type of strength, especially when there's such big negative divergence on that trade, on that chart. Do you have any webinars on adjusting spreads? So I don't currently, but I certainly should start thinking about adding some of that. We talk a little bit about adjusting spreads on the debit and credit spreads webinars, but I don't go into them in depth. So it's something that I definitely can cover a little bit more. Where can we find your previous webinars? So they're all available on our YouTube channel. So I highly recommend you to follow us on YouTube. If I'm not mistaken, you can find us on our YouTube channel. I'll get you a link here once we're done here, but you can find us on OptionsPlay on YouTube. That's where we post all of our webinars. Frank wants to look at Blackstone Group. This is actually one that I was looking at earlier today. Blackstone Group, recently just got rejected at the 20-week moving average. Certainly looks like there's a fair amount of resistance here around that 54 level. It's kind of stuck right now between this 200-day moving average and this $54 level. There's certainly signs of weakness here. Money flow is continuing to weaken. I think there's a higher probability of this pulling back. I think this is generally true for a lot of financials. If you look at financials is certainly one of the weaker sectors that we've seen. And especially if you think about the fact that financials predominantly, are very highly correlated to interest rates, and interest rates continue to move lower, we see this disconnect between banks and interest rates, right? So if you look at banks like Wells Fargo, Bank of America, JPM, these are all stocks that rallied a bit during the week, but is starting to fade that strength, right? So, we see this pretty strong support level here around 26. It's rallied multiple times off of those lows, but each time it kind of doesn't quite get as far. And I think that might be the last rally. And if it breaks below 26, that's when things really start to fall apart here. So I'm watching financials very closely, because if they do break below some of these major support levels, I think that's where you can see some further downside from those names. Now, Blackstone is obviously not the same as some of these names, but I would imagine that it has quite a bit of exposure similar to the banks. But Blackstone so far has actually held above that 200-day moving average. So perhaps Blackstone is showing some outperformance here that the other financials are not. It certainly doesn't look as weak as the banks right now. Tesla, this is one that really kind of blew off a little bit today. I don't know. This stock continues to move higher, but as you can see, momentum continues to move lower. On the weekly candle, you have this pretty big distribution bar. We obviously have one more day left, but reported earnings yesterday is now trading lower. I can't help but think that this, at least for right now, 805, 800 is probably a temporary top here in Tesla. The fundamentals from my perspective don't really line up. If you look at GM, if you look at Ford, these are the names that are actually really weak. I actually quite dislike Ford because, as you can see, you have this kind of triangle here. It could break out either way, but I'm more inclined that I think that you're going to see a breakdown to the downside. We shorted GM a couple of weeks ago. We were obviously a little early on that. But the fact that it got back up to that $24 level, I think that probably would have been a better level to short some of these names at, or at least sell call credit spreads at those prices, and see if you do get a decline to the downside. But automobile manufacturers certainly do not look particularly strong. Tesla, obviously a little different from GM and Ford as a battery company, but I think with oil prices so low, there's just less of an impetus in my opinion, for electric cars, especially given the fact that you have 30 million unemployed people here in the US. It's going to provide some downside pressure to consumer spending. I think we've already looked at NVIDIA, we've already looked at Disney, CVX, Chevron. This is one that I was also looking at as well, because energy, similar to discretionary names, very weak sector, but recently have had some pretty nice gains to the upside. And I'm inclined again to fade some of this strength here because, relative strength on this particular stock is still relatively low. You have this major resistance level around 100. It hasn't quite gotten up there. So it's possible that you kind of have one last push up to that 100 before you see some further selling pressure here. But I'm inclined to fade some strength here in the energy sector, as it is one of the weakest sectors here. It is one of the sectors that we're still continuing to see declines in earnings in this particular sector. The only sector seeing any gains in terms of earnings is staples and technology. Those are the only two sectors that we're still seeing some upward revisions, and where the earnings are holding up relatively well. Looks like we've covered a lot of this. INSG, I don't know INSG. Inseego Corp. Sorry, I just know nothing about this stock. It obviously looks very strong. Rallied, from that, looks like almost looks like Zoom a little bit. I really don't know. I really don't know anything about this stock, so I unfortunately don't have anything to comment. VET, I also don't know this particular stock. These are stocks that are clearly outside of the liquid list. That's why I don't know any of these names. But obviously a very weak name. Energy, it's up 6.9% today. So perhaps you want to take a flyer on that, but again, be very careful because these are not very liquid. Bank of America is similar to Wells Fargo. From my perspective, I have a trouble looking at longs on this particular sector, even though earlier this week it looked like it was starting to come back to life. But Bank of America right here at this $25 level, that's a major resistance level. If it can get back above 25, then I would certainly take a look at getting long financials. But as long as it stays below 25, I think that what's likely is going to happen is that these stocks are going to start drifting lower. Because, I mean, if you look at these stocks, predominantly their revenues comes from interest rates, and interest rates are near rock bottom. So I don't see a strong fundamental case for these financials to be recovering. But again, fundamentals is not really what drives the market right now. So, and let's just take a look at Apple. Did Apple report earnings yet? I'm not sure if those earnings came out yet here for Apple. Oh, it did come out. Looks like it beat earnings here, 255 on earnings. What was revenue? Earnings 255. Revenue, whoa, 58. Wow, so beat on both earnings and revenue here. Stock looks like it's still trading down. Maybe my after-hour quotes is not working here, but looks like it's down. Wow, a lot of comments here. Wow, so many. Won't be able to really cover all of them, but let's see. I see a good question here. How do I find which sectors are strong? Great question. So we have a watch list here built into OptionsPlay, where if you click on watch list, the first watch list that's always going to pop up are the sectors. And we purposely did this because when I start my research every single day, I want to know what sectors are strongest, what sectors are weakest. And we have the score. This is the technical score. The technical score tells you the relative strength of each stock. So we also do this by the sectors. So you can easily see that financials, energy, and industrials are the weakest sectors. And then consumer discretionary, technology, and healthcare are the strongest sectors. So if anyone looks at charts, you should be probably fairly familiar with these sectors because you should have seen that financials, energy, and industrial have been some of the worst performing sectors, while consumer discretionary, technology, and healthcare are obviously the strongest sectors. So that's the quickest way, in my opinion, to utilize our platform and immediately know what sectors are strong and what sectors are weak. I'll try to get through some of these. Alibaba, I was looking at Alibaba earlier today. Alibaba, it's fairly neutral. It obviously is stronger than the market here, but it's starting to turn lower. It broke below the 20-week moving average. Momentum is starting to move lower here, but it's still in this very neutral zone. I think if it breaks below 200, that's when you can start to see some moves to the downside. Verizon has held up really well. It's been kind of trading in this 58, 57 range for a long time now. We actually sold some put spreads here on Verizon, just basically hoping that the stock stays exactly where it is. The stock pays over 5% dividend, and I think you're not going to see a lot of big moves here. Microsoft popped on earnings yesterday. We're taking profits on our put spread here on Microsoft. I don't know how much higher this stock can go, I'll be honest. I mean, obviously it is not as susceptible to the consumer market as Apple is. And let's just look at Apple again. Yeah, so I mean, the after hour quotes on Apple. Yeah, it looks like Apple is down after reporting earnings. And this is exactly what I'm expecting, is that these markets can't go much higher. Microsoft popped on earnings. All of these stocks that have really popped on earnings haven't really been able to sustain that move. Google, same thing. After popping on earnings, it has actually sustained it. So I will say Microsoft and Google probably stand out on its own. Apple is more susceptible to consumer spending, and I think that's going to be the weaker name. Carter Worth on Options Action last Friday mentioned how Apple is not a defensive play at all, despite the very massive balance sheet they have. They are, at the end of the day, susceptible to consumer trends, unlike Microsoft, Google, Amazon, which have a large B2B business or predominantly B2B business that are less susceptible to a sell-off. So you're definitely going to start to see this bifurcation between companies that are focused more on the consumer versus companies that are not, like Microsoft. MRVL, is that the Marvel Tech Group? I don't know a whole lot, but it certainly is relatively strong. But again, similar thing that we're seeing, right? As markets continue to kind of remain strong, momentum continues to weaken. You've got this double top here around 28. I think you're going to have a tough time getting above 28, but if it does break 28, then you certainly will be looking at this. Wayne Square. So Square is surprisingly strong. You know, if you look at Visa and Microsoft, started to see some weakness here today, but Square remains relatively strong and rallied all the way up to that 65 level. You know, we looked at shorting this in the 50, was it 56 or so, or 50? No, it was around 50. And we thought that this was going to continue to weaken, but it hasn't. It continued to move higher. But as you can see, you know, Chaikin money flow continues to be fairly weak here. So, you know, I think that if you're looking at this particular name now, selling cover calls and fading this type of strength is the play here for me. Symbol INO. INO. I've heard of this name. Oh, it's a pharmaceutical stock. So I'm not a big fan on betting on these individual pharmaceutical stocks right now because I think you're kind of just gambling here. What I do like, though, is the NASDAQ Biotech ETF. You know, I've been talking about this for a few weeks now. We've been talking about selling put spreads here on IBB. It's staying above that 123 key resistance level. It's come back to retest that 123. The question is whether or not I can hold that 123 and looking for a bounce off of that. Otherwise, if it breaks below 123, then I would say that you kind of lost, at least I would lose interest in this particular name. EA, so EA has been one of the stronger names here. You know, stocks up to 114 on that move yesterday. Interesting enough, Activision Blizzard is down today while EA is up. You know, EA has, in my opinion, a stronger portfolio for mobile gaming, which is really what's taken off during this coronavirus. So we're seeing some strength here. I like this as long as it stays above that 113, 114 level. You know, I think that EA can continue to move higher. Esports, obviously, also another big category. This was a category well before coronavirus that was seeing momentum. So that's why I particularly like this play here for Electronic Arts. Arch, I don't know Arch Coal. I don't know much about coal, but I certainly know that coal isn't doing very well. You know, I think pretty much the whole world is generating electricity on coal is a declining business. So the chart looks pretty bad. I certainly don't think that I'd be touching this stock. AMD, we've covered NVIDIA before, but AMD looks pretty much the same thing. You've got this double top, and I think that you've hit some form of a resistance here for semiconductor stocks. You know, I don't have a strong view on AMD, but I certainly have a stronger view on Texas Instruments, which is certainly a weaker name. I think this is a stock that's more likely going to see some declines as semiconductor stocks starts to come lower. Roku. Roku, you know, you have this fairly strong downtrend here from this chart here. 100, I would be looking at this triangle. So I think that you're probably going to revisit 100 here on Roku. I think Roku is similar story to Netflix. It had a bit of strength during the coronavirus sell-off, but, you know, it's starting to fade that strength. I don't see a strong case for Roku, in my opinion. You know, but I don't have a lot to add. I have Roku devices at home. I use them. I love them. But I don't know why this stock necessarily should be supported long term, in my opinion. Baidu, I'm actually quite bearish here on Baidu. This is the daily chart. Yeah, daily chart here on Baidu. You know, relative strength here is just very poor. You know, this relative strength started well before the coronavirus. As you can see, this is underperforming since 2018. You know, as the markets continue to march higher, this stock continues to move lower. There is a bit of positive divergence here, you know, at the bottom. So maybe that means that this stock is near a bottom, but you really have to start to see this stock break above, you know, these types of levels before I would consider going long Baidu. So right now, relative strength here is, I don't particularly like this stock. Put spread for BA. Stuart saying put spread for BA. Stuart, are you long puts or you want to short puts? So BA, Boeing, you know, Boeing has been trading in this very tight triangle, right? And I don't know which way it's going to break out, but whichever way, it's likely going to make a big move. Another name that I've been watching is actually General Dynamics. This is a supplier to the aerospace. I've been looking at General Dynamics. I've been looking at shorting General Dynamics. 130 is a major support level that on this particular stock that I think if it breaks below, you're going to start to see 125 and maybe starting to see some moves to the downside. Similar chart setup to Boeing, but has already broken down to the downside. So if you look, however you want to draw your lines, it's already starting to break to the downside here. So I think that this might be a leading indicator for Boeing, but again, Boeing itself has not broken out yet. But I am watching Boeing very, very closely. What do you think about Oracle? Oracle, I think, very similar chart to a lot of the other tech names. Oracle's managed to stay above that 58 level. Oracle, being that they are predominantly B2B, I think will be somewhat insulated from all of this. But this $52 level is a major level that I'm going to keep my eye out on here. There's not a lot of obvious clues here in Oracle, but you do have this continuing decline here for quite some time. It's managed to make its way back up. I don't see a strong case for this stock to rally. I think you're likely going to see more of a decline here, but until it breaks way one way or another, I don't have a strong view on Oracle. IBB already covered that. XLY, let's look at XLY. XLY, it's been a spectacular chart, right? But I will say this chart is pretty much all because of Amazon and Home Depot. Amazon and Home Depot is 40% of this ETF. And Carter Worth actually brought this up on Options Action 2 weeks ago or 3 weeks ago, where if you look at the consumer discretionary index, if you look at the market cap weighted, which is XLY, versus the equal weight weighted, the two are very, very different. So what we need to do right now is understand that XLY is basically being dragged up by Amazon. And Amazon, I think, made a new all-time high. Yep, new all-time high after hours is down quite a bit. Ooh, Amazon also reported earnings as well. Looks like it's down quite a bit. Amazon reported, it was expected to be 623, came out to be 501. Wow, that's a big miss on earnings. And what about revenue? Also missed on revenue. Oh no, it came out higher than expected on revenue, but missed pretty big on earnings. So I think that's really where why Amazon's down. How much is it down? $129 after hours, so about 5% after hours. So I expect, perhaps that might be the catalyst that puts a top in here for XLY. So let's look at XLY real quick. Whoops. So I would expect XLY is probably going to open up lower tomorrow as a result of Amazon being down 5%, because Amazon is basically 25% of the weight of XLY. I'm not inclined to buy puts yet. What I'm going to be covering next week, which is how to prepare your portfolio for a market correction. We're going to be talking about buying puts, but specifically, I want to make sure that everyone understands when you should buy puts, because I don't think now is the time to buy puts yet. I mean, no matter how many of you on this call that thinks that, markets are going to correct lower, you could be, as we have, for some of the names that we've tried to short over the last few weeks, we've been proven wrong that markets can continue to grind higher a lot longer than the fundamentals not lining up with the chart. So I'm more inclined to sell premium, collect some premium, and when we do start to see that momentum shift to the downside, that's when you want to buy puts. But then by then you would have generated a little bit of premium, and you take that premium to buy puts with it. PayPal. I haven't looked at this chart recently. Wow, PayPal extremely strong here. PayPal. You've got a bit of a triple top here from a weekly chart. Notice how same thing we're seeing across the board, right? Weak relative strength, weak money flow as the stock continues to move higher. I would definitely be fading this type of strength. If you own this stock, I would look at selling cover calls. Let's see how much premium you collect. Not a whole lot here, actually. About 0.8% on a stock like this. I would actually expect that you get a little bit more, but here you don't. Maybe if you get a little bit more aggressive, you might get a little bit more. Yeah, so if you saw the 130 call, which is still well above its 52-week, its all-time highs, you're collecting 1.58% of the underlying stock price in 22 days. That's really not a bad yield to collect on this particular stock. And if you do get one last thrust higher, that allows you to take profit while collecting some premium to do so. AT&T, very similar to Verizon. It's just kind of been stuck here between 30 and 31. You know, AT&T obviously pays a pretty hefty dividend, so I'm inclined to take a look at selling some put spreads here on AT&T. I think that as you rotate out of some of these high-flying stocks, as you start taking profit on some of these stocks, like you know, the ones that we've talked about, like some of the semiconductor stocks, some of these discretionary names, you want to start positioning yourself into more defensive names like AT&T and start thinking about your dividend yield, start thinking about the income stream that you can generate off of your cash, because you're not going to necessarily expect the same type of capital appreciation going forward. You want to make sure that you prioritize your income during that time. GDX, I love GDX. I really like GDX, even though it pulled back quite a bit here to 32. It's still well above that $32 level here. As long as it stays above 32, I like GDX. GLD obviously came back down a little bit to 158. Again, I still like gold. I still think gold, the long term, is a good investment, especially as the Fed continues to pump liquidity into the markets, but not a short-term trade. It's really much more of a long-term trade here. ZG, I'm not familiar with ZG. Zillow Group. ZG. So Zillow, I'm surprised that Zillow is the chart is looking as strong as it is. Zillow managed to break out above. So we've seen a lot of charts that look like this, right? Where you kind of have this triangle. It's kind of like the Disney chart, where you've got this breakout. Now, the question is whether this breakout is real and it's going to continue, or it's a bit of a fake out where it's trying to trap some longs, you know, trying to see if it can capture some longs and then just start to roll over and die. Hard to say, but money flow here isn't particularly strong. It's still being rejected here at the 20-week moving average. I certainly think that there's a fair amount of resistance here, but again, if it can manage to get above this level, then I certainly think that it's got some legs to the upside. QSR, I really don't know much about this, but one thing I will point out is that you see this was a major support level back here, broke it, and now is testing as resistance. Looks like it's starting to get rejected. If this closes this candle here this week, you know, with this distribution bar, I think that you're going to at least get a small pullback here. So if you like the stock, I would certainly wait to go long. I would wait for a pullback here. Shopify, I get a lot of questions here about Shopify. The stock has obviously been doing very, very well, but like many charts, as the market continues to move higher, momentum has not been confirming that, showing us this massive negative divergence. You know, this is really scary to me. You know, this is the type of divergence that we saw back in February, right? So if you look at the SPY, we saw it as the markets continue to make higher highs. Momentum was actually not confirming those highs, and that's when we got that massive sell-off. So we're seeing a lot of these same things in semiconductor stocks and in Shopify. There are so many names, in my opinion, that fall under this particular category at the moment. Apple just reported earnings. What do you think? I think we've covered that. Selling cover calls on Microsoft and Intel. I think those are definitely names that you want to sell cover calls on. Intel, we're long right now. We're also selling calls against the long calls that we have here in Intel. Intel at the moment still remaining strong, but not getting the same type of movement to the upside. But we weren't expecting a big move to the upside. That's why we have the call diagonals here. as opposed to just the outright calls with a call spread. But as of right now, the stock in a very neutral zone, I would say, but certainly stronger than most other stocks here in the market. When selling credit spreads, is it generally to go shorter or versus longer? So whenever we're selling, you always want to go shorter dated for an expiration. So whenever you're selling, you generally want to choose shorter dated options. XLE is one of those sectors that I think, just it was so oversold that it had to bounce a little bit. But I think this is a sector that you're going to see further declines, in my opinion, after the strength. So crude futures back up to about 19 bucks, but still 19 bucks is not good for pretty much any of the major players here in the U.S. I'm sorry, any of the vast majority of oil producers here in the U.S. 19 bucks, they're not going to be profitable. And they don't actually get 19 bucks. 19 bucks is the pump price. That's not what the producers are actually getting when they bring it out of the ground. They're probably looking at 16, 17 bucks on that $19. They're not profitable at those rates. So I think you're going to continue to see declines in production as a result of that. But I don't see XLE making it much further before you start to potentially see another wave of selling here on XLE. VRTX, whoops. Vertex Pharmaceuticals. So strong stock, similar to the IBB chart, right? Where you have a break above resistance, but is now starting to retest that resistance. The question right now is, are we going to bounce higher or are we going to break lower? I think this is a good time to just wait and watch and see whether you get that move to the upside or downside before you get into that. Okay, so it looks like I've covered a lot of things here. So Delta, we'll do one more. Delta, we talked about selling puts on Delta. We talked about selling those $20 puts on Delta. That would have worked out fairly well right now. American Airlines, reported earnings, was it yesterday or today? Fairly poor earnings, but the stock is, down 5%. It wasn't down a whole lot. Yeah, down 5% here today, down a little bit more after markets. So I think airlines here have predominantly found a bottom here, or found, some downside, because, these companies have now provided a fair amount of guidance, at least as far as how much liquidity we have by the end of Q2. I think most of the guidance that we're currently looking at is looking at probably a 2 to 3 year runway before they really get back to normal. And the markets are pricing kind of what that looks like right now. And I think we've kind of found a bit of that equilibrium right now. Do I think it's time to buy the airlines? Not necessarily, especially since most of them have pretty much cut their dividends. So you lose that. And in my opinion, that it's just not worth it. I think if anything, you could speculate on buying some longer term leaps for a longer term recovery. But I don't think it's quite yet time to buy some of these airline stocks. How do I get, great question. So let's cover a few things, and I'm going to cover Q&A. So, so we spent quite a bit of time looking at different markets, looking at different symbols. I hope that was useful for those of you that submitted some symbols and we looked at them together. I think you'll see very similar themes across the board for most symbols, where, we're getting to that point where there's a lot of negative divergence. There's a lot of the same divergence that we saw back in February and January. I will say that divergence can continue to go on for a few more days, a few more weeks, possibly even a few more months before that negative divergence resolves itself. So be very careful. I don't think it's prudent to just go outright and buy puts just yet. I think you're better off selling some call spreads little by little as the markets, especially on up days like yesterday. Those are good times to enter those types of credit spreads. Perhaps selling some put spreads on days like today, where we're down a little bit as the markets continue to grind higher. And once you get that shift in momentum to the downside, and trust me, when that shift happens, you will know then that would be the time to start buying puts. At that point, hopefully you would have collected a bit of premium from selling these call credit spreads, some put credit spreads, and then you take that premium and you buy puts with it when you need it. So with that, I want to thank everyone for taking the time out here today to submit those symbols. I hope that this was useful for you. So, and again, if you guys find this education that we do every single week useful, the liquidity reports, the access to the platforms, if you find this useful, please consider supporting us by becoming a member. So to answer your question about how to become a member, you can just click on this link here at the bottom of your screen, which I'm going to post into the chat window. Membership is just $75 a month or $500 a year, and it gives you access to the platform itself, the education that we provide you here every single Thursday, the Tuesday and Friday morning outlooks to give you a better understanding. Tuesday and Friday morning, I basically do a quicker review of what I've done here today, where we provide you with our market research, market color, where we think the markets are headed, and different ideas that we're currently watching. So with that, I want to thank everyone for taking the time out here this afternoon. I'll try to answer some questions here into the chat window. So for those of you that answered, I'm sorry, in the Q&A window. So for those of you that had questions, please type them into the chat window and try to answer some questions there. I have about 10, 15 minutes to answer some questions there. Thank you so much for all of you. I'm gonna answer this one question that I think for some of you that invest in crypto, the question is, any thoughts on crypto? I will say that what I do kind of like about Bitcoin is that it's it's great for technical analysis, in my opinion. And the crypto chart right now looks very similar to a lot of charts, where you kind of have this this downtrend, if you will. Bitcoin has predominantly been in kind of this downtrend, and it's been trading in this channel. And the question is whether or not we're going to finally get a break out of this channel. Now, we've had this kind of blow off bar to the upside. Are we going to get a bit of a correction down here back to 8,000 before it moves higher? I think that you're likely going to get a bit of a correction here. But I certainly think that, for those of you that are interested, should you buy some Bitcoin? Should you be looking at Bitcoin? I think that it's not a bad idea to buy a couple of $1,000s of Bitcoin, especially if you have the discretionary income to do so, and sit on it. Because guess what? If Bitcoin goes to zero, you lose a couple of $1,000. Chances are you probably trade that on some of these options trades, but perhaps in a few years, perhaps in 10 years, maybe it's worth a lot more. I think that asymmetrical risk is worth considering. Someone once told me, if you want to buy Bitcoin, spend as much money as you would on a nice lunch. However much you would spend on a really nice lunch with you and your wife or you and your significant other, buy that amount in Bitcoin. It's not going to break, it's not going to make or break your budget or anything like that. Or and then maybe one day it's worth something, and if it's not, it's the same amount of money that you lost in over an expensive lunch. So Ivan's asking, do Tasty Works allow you to trade spreads? They absolutely do. Are you able to close spreads the same way you do with other positions? Absolutely. You're able to close those positions as a single strategy, just like a call or put. Do you still believe in a put spread in BA? So again, Stuart, if you don't mind telling me if I was buying or selling that put spread. Again, I think for BA, I want to see a break one way or another outside of that triangle. Amazon call vertical, I don't think I would touch Amazon right now. It certainly looks like it's kind of at that peak. Even intraday, I was looking at, I thought that this was going to start reversing lower. It looks like on earnings, it is starting to reverse lower here. How do you determine the liquidity of a stock or option? So we look at the bid-ask spread to determine the liquidity. What type of data do I need on Interactive Brokers platform when I'm trading options and futures? You definitely need level 1 real-time data. Sunil, I've rolled my Amazon cover call twice. In the process, I've already generated losses of 9K with the original premium collected was 1,200. So my question is, should I continue to keep rolling the option if it does not go my way? What about the losses that keep accumulating? So they're not actual losses, because whatever you've lost on the cover call, you've gained on the underlying stock. So it's not a true loss. That because you'll gain that you'll get that gain. You'll receive those gains if you sell your stock. Now, I think that if you've sold some covered calls, you probably, as a result of this earnings announcement, you might find some of those calls are now out of the money as opposed to being in the money. So it's hard for me to tell you what, because I don't know why you invested in Amazon, how long you originally planned on holding on to Amazon. But it certainly is a winner. So if you think that it's going to continue its gains to the upside, I would keep rolling those cover calls because you are gaining those gains on the underlying stock. Ralph, can you do an in-depth session on buying stocks by selling puts? We actually just did one a few weeks ago, Ralph, so I highly recommend you to take a look at our YouTube channel. Here, let me find that for everyone. OptionsPlay YouTube. So I just posted the link to our chat, our YouTube channel into the chat window. You can find all of our videos. We just did one a couple of weeks ago on that very topic. Let's see if I can find that for you guys. So enhancing your equity positions with options. This was posted 3 weeks ago. This is talking about how to buy stocks using cash secured puts. Can we sort these sheets in Excel? Yeah, you can. So you can actually create what's called a filter view that only you can see, and you'll be able to do filtering and sorting and all of that. The same thing you normally would be able to do in Excel, or you can download it. You can actually go to Save As and you can download a copy, and you can do whatever you want in Excel with that. Is adding the liquidity something you can? Is adding liquidity something you can add to the platform? Ralph, that's exactly what we're currently working on, is getting the liquidity into the platform itself as well. I miss a minute or two. Can you show me how to get to the earnings and liquidity? So the earnings and liquidity spreadsheets our links are at the bottom of your platform, both earnings and liquidity at the bottom of your platform. Sorry about the basic question, but what do you mean by company is liquid? It just means that the options are liquid. I'm not saying the company is liquid, meaning that you can get in and out of the options fairly quickly at the midpoint or the midpoint price of the option. So that's what I mean by liquid. What are the pros and cons of deep in the money? I generally deep in the money 95 delta. So Rick, I would never go that far deep in the money because then you're just going to be trading the stock. I usually think that, part of the reason that you want to trade options is you want the convexity, you want the asymmetrical risk. When you trade a 95 delta call, you're really not getting any asymmetrical risk. So I much prefer buying a 60 delta deep 60 delta call, because then you get that asymmetrical risk, so that if the stock goes against you, you're losing less and less money because gamma is going to reduce your delta significantly from 60 down to the 40s and 30s if the stock starts to go against you. Versus if you start at 95, the gamma is not really going to kick in until you have some significant gains, significant losses. So that's why whenever you're trading options, we generally don't like to buy those really deep in the money options. When your cover call is trading above the strike price, I'm not sure that that's a question. If you don't mind asking that in a question, that'd be great. What's your view on inflation what's your view on inflation, say 3 to 6 months? I don't really see a strong case for there being inflation, but I do think that long-term gold is a good investment because I do think inflation might be a problem long-term. I would say that the jury's still out on that. I think there's good arguments on both sides that you're going to see a significant amount of inflation versus not seeing any inflation at all, and potentially even stagnation. And if you look at Japan in the 1990s and the decade after that, I think that's a good template for potentially what we're going to go through. And we didn't necessarily see hyperinflation during that time. You don't want to have your, and if you don't, I think these two are connected. When your cover call is trading above the strike price and you don't want to have your shares assigned, how can you handle this transaction? You just buy back your cover call. So if you sell a covered call and it's above the strike price and you don't want to get assigned, you just buy back the call that you've sold. Could you please describe the table that you are talking from? I'm not sure if you meant this one or this one, but the liquidity file is just telling you which symbols are very liquid, which symbols are somewhat liquid, and it gives you the implied volatility and the earnings date. The earnings calendar is just telling you which stocks are reporting on which date, and it's color coded based on liquidity. Green ones are very liquid, yellow ones are somewhat liquid, and anything that's not colored is not very liquid at all. How would you hedge a concentrated position in lows? I would use a collar. I would sell cover calls, and I would buy some puts to offset that. So let's look at lows. I think you said lows, right? Yeah, lows. Lows trading at 104. So I would look at something like a collar where you're selling, let's say maybe a June 120 call, or maybe 115 call, especially if you think that there's going to be limited upside. And then you look at buying a put option, maybe a $97 or $95 call option, and your net trade on this is only 85 cents. So you're paying 85 cents to basically collar your position. So as you can see, the line here looks very similar to a short stock position. So for those of you that follow us on options action, you might know this as a risk reversal. This is basically a short risk reversal. So you're buying that put that gives you downside protection. You're selling that call, which is generated, which is a cover call on the underlying stock that you own. So that's, David, how I would hedge a concentrated position in lows. Work, do you see a play? So work is, if I'm not mistaken, is Slack. Yeah. Slack, the stock has really kind of been very boring between 24 and 30. It really hasn't broken out in one way or another. You would expect that it would have during the coronavirus, but it hasn't. So, and I think that with Microsoft Teams coming out with, I just don't really see a strong indication of the stock breaking out one way or another. But if it breaks below 24, certainly not good for the stock. But if it breaks above 30, then I think you have some interesting moves here. I will say relative strength wise, pretty good because it's trading back near its February highs. So I just don't have a strong indication, but between 24 and 30, I certainly wouldn't necessarily trade this stock. OptionsPlay was bearish on Nike on the stock, but it's continued to move higher. How reliable is OptionsPlay on its predictive analytics? Well, Stephen, I can tell you that there's no crystal ball that anyone has, and that despite the fact that our fundamental analysis on Nike and the consumer data showed that, and you can look at the consumer sentiment data, you can look at the consumer credit card data, it is dismal, and I think that's putting it nicely. Nike trading at fairly peak valuations. We took a bet, our bet was wrong, and sometimes you're going to be wrong in the markets. We certainly were on Nike. Are the covered calls and cash secured puts that are posted on Monday, are the cover calls and cash secures that are posted on Monday liquid enough to trade, or do we need to cross-check with the liquidity report? Great question, Joan. So we only post S&P 500 stocks on that cover call and cash secured list. And keep in mind that cover calls and cash secured puts are a little different from the perspective of therefore your equity positions. So we generally consider any S&P 500 stock as very liquid. So that's why we use the S&P 500 list for that particular report. So we would consider any stock on that report as liquid, Joan. I don't think you need to cross-check that with the liquidity report. You recommend short puts that buy stocks, but is it not necessary that I will be able to execute the contract? So how is a short put to buy the particular stock? So you're right. So a short put doesn't guarantee that you buy the stock. If you need to guarantee yourself to buy the stock, then you should just outright buy the stock. But that's really where I think that's the difference between needing to buy a stock versus putting the edge in your favor by buying stocks at a discount. So if you get into the habit of selling stocks, selling puts for stocks that you want to purchase, you're not going to be able to buy every single stock. You're actually not going to be able to buy maybe even half the stocks. But the stocks that you buy, you're going to buy at a discount. And that's a discipline that I think that sets many, I would say, professional investors apart from others, because they are very disciplined in buying stocks at specific levels that they are comfortable with at a discount if possible. And they do it through strategies like selling puts, as opposed to just outright buying every single stock that they think is going to go higher, because no matter who you are, there's going to be stocks that you're going to be wrong on. What you want to make sure is that on the stocks that you're wrong, you actually have a smaller loss. And the only way to do that is by shorting a put instead of outright buying the stock using a limit order. Don't you need about 30K to make that one cover call? Well, you don't want to sell any cover calls unless you own that stock. So cover calls is not a strategy unless you already own that stock. If you already own that stock, you don't need any additional capital to sell a cover call. How do you manage efficient entrance and exit for a given option position, recognizing volatility in markets? Great question, John. I manage it by only trading symbols that are in this very liquid symbol. If it's not very liquid, I don't touch it, because if it's in this very liquid symbol, I can get in and out at the midpoint without any problems. I mean, I trade hundreds of option strategies, and I only predominantly put my orders at the midpoint. And when I trade these specific symbols, I'm able to get filled at that midpoint. And that's really the difference. And that's why liquidity is so important when you're trading earnings. And that's why we created this report for you. Sold cover calls on FANG stocks with a significant increase in stock prices run the risk of being called away. This is a taxable account. Should I buy back call or let it go and hopefully buy back at a lower cost? Ronald, I'm in the camp that if you sell a cover call, you should be comfortable with losing that stock. You shouldn't necessarily sell too many cover calls in stocks that you don't want to get called away, because the whole point of selling a cover call is to sell your stock at a profit. And yes, sometimes the stock will run above your cover call strike, but that's okay. You've taken profit. You've taken profit on that particular trade. Take your capital and apply it to the next trade. You can't possibly extract the maximum gain on every single trade. If you would, we all would, but that's simply not possible. How do you decide if a call calendar or put is better for SPX? I've noticed that prices are the same for both of them and have a good profit probability. A call calendar or put calendar? Well, I would say that it really depends on what your longer term bullish or bearish view on SPX is, because if you're long-term bullish, you might want to trade that call calendar. If you're long-term bearish, you want to trade that put calendar, because that's your long-term exposure. How does OptionsPlay calculate expiration and strike prices? We don't calculate them. They're given to us by the exchanges. What do you think about GLD? I think I covered that already. Well, would you demonstrate how you would roll an option which expires tomorrow? Well, rolling there's really not much to demonstrate. To roll simply means closing an existing position and opening up a brand new one. I'm not sure what there is to demonstrate on that, Haley. If you don't mind clarifying, I'm happy to answer that question. What is the MA green color? I'm not sure if you're referring to this one, I think it's the 50 period moving average. Yeah, 50 period moving average, the green one. Is deep in the money option safer in terms of overvaluation? No, it's actually more risky. So the safer ones, in my opinion, are the at the money calls, because that truly gives you that convexity, that truly gives you that asymmetrical risk. It's not, I wouldn't say it's safer, but it's less risk. I think it's a better way to put it. Financials setting up for call credits, but if they're trending down. Yes, that is correct, Keith. Can you explain the weekly report on the optimized cover call and short put? Yeah, Chris, I actually covered this in that YouTube video on enhancing your equity positions using options, where I did cover the cover call and cash secured reports. when it comes time, I want to buy some things. Does it make sense to sell a 1 day or 1 week cash secured put instead of putting a limit order? Well, I would argue that you always should use a cash secured put instead of a limit order. That's kind of what I was teaching in this particular webinar. Um, I think I've covered a lot of these already. Without guidance, does any of the earnings really make a difference anyway? I would argue it doesn't. So I would say this is the most important and the least important earnings announcement that we've ever had in the history of, I would say my trading career. And stock seems to do whatever the hell they want, regardless of where earnings come out. We've had stocks that missed and then shot higher. Vice versa, we had stocks that beat and then just started to move lower. So I would say that this earnings season doesn't mean a whole lot, but it does give us the data that we want to get a better understanding as to where each company actually sits at the end of earnings season. So with that, I've tried to cover as many questions as I possibly could here. I tried to cover as many symbols as I possibly could, but we are out of time. But I do want to thank everyone for taking the time out here this afternoon. I really hope that you guys find this useful, and I hope that you guys consider supporting us to allow us to continue doing this by becoming a member, by joining us using the link here on your screen that I just posted into the chat window. Thank you so much. I hope you guys are able to make it to our session tomorrow morning. Not a lot is going to change between now and tomorrow morning, but I am going to cover some of the research that we're looking at, which I don't cover here during these live market sessions. We just cover the symbols that you want to look at. I want to share with you some of the institutional research that we're reading, what the fundamentals really look like under the hood, despite the fact that markets continue to move higher. I think it's important to know that while you're trading. And then at the same time, keep an eye out on where the technicals and where the levels are. So we'll be covering that tomorrow morning at 9 a.m. I hope to see many of you there. And until then, have a great evening.